Hey, everybody. Jeffrey Beamer, Senior Investment Strategist over at ewot and welcome to Earnings Call. Boy, we got a big week this week that is dominated by the retailers. So we're going to talk retailers this week. Well, almost everything retail, but we're also going to talk about a nice winner that we had last week and including a special trade where we made almost 300% on that trade, all coming up in just a few minutes right here on Earnings Call. As I mentioned, we're going to talk about the retailers all this week. We have the earnings calendar is dominated by the retailers. We have companies like PDD Holdings. Now, before you ask, that company owns a company called Temu, and think Amazon, but a little different. All right, they had earnings this morning. Think about Nordstrom's, Foot Locker, and many, many other retailers all declaring this week. So we're going to dive into that. Let's start with some headlines, though, focused on the retailers. We're going to begin today with Target. Target shares spiked last week as profits rose. I'm going to pull up the chart here. And what's interesting with these earnings on the retailers is you can see these big spikes up. And then the stock just moves sideways. All right. So Target moved up 16% pretty early in the day and then just started pulling back as the day progressed, finally settling around 10% up at the close of business. And then we thought we were going to give it all back, but we didn't. Okay. After the following day where the stock was down just slightly, you can see here on the chart that we have just pretty much traded sideways since then. Now, this is interesting because I think the market or the street is just kind of analyzing where are all the retailers going to fall? Because like I said, we have lots of retailers declaring this week. Next headline happens to be on another retailer, and we're talking about TJ Maxx. Okay, so this is TJX companies, and you can see that they had a nice little gap up of about 6% on the day. Now, here's the thing about that move. That was the estimated move. Okay. So option market makers had priced in a $6 move for the stock. And well, that's exactly what happened. The stock moved up about 5.8% actually. And you can see what's happened since then. All we've done is move sideways since their earnings event. Market and the street is just trying to digest who's going to come out on top. Is it going to be the luxury brands or the discount brands? So let's take a look at what we consider more of a luxury brand, and that's Macy's. Macy's also declared last week, and guess what? Okay, the stock dropped almost 13% on their call. They saw some weakness in their consumer, and this is considered more of a luxury brand. Okay, so this is where the market was like, a little trouble from maybe the luxury side, maybe the deep discount side. Where are we going to fall in the middle? Companies like TJX and Target. Okay, but the stock, look at this, it gapped down almost 13%. And then what has it done? It's traded sideways. It's just going sideways as the market digests all this information. All right. So let's stick with the retailers here. Let's pull up the earnings outlook that I drew up for you. And there are some other names that aren't retailers, but as you can see, the retailers really dominate this. And there's names that aren't appearing on this list. For example, Bath and Body Works has earnings this week. Victoria's Secret has earnings this week. The Gap has earnings this week. So these are just companies where we were focused on stocks that will move big, meaning over 10%. That's on the left-hand side of the screen. And then stocks on the right that we think are going to move less than 10%, okay, that usually have quieter earnings. And so we're expecting that out of companies like Best Buy and Lululemon, okay, Campbell's Soup, et cetera. These are going to be stocks that are going to move relatively quiet, at least in our estimation. All right. So retailers are really on the forefront this week. As you can see, there's Nordstrom's on the list and others. And so everything from the luxury brands to the discount brands, all over the place for the retailers. Now, so we'll keep an eye on all these. And next week, I'm sure there's a lot of news. And what makes this so interesting is on this list, as you're looking at it, the number of stocks that are going to advance, we expect, by over 10%. Now, this is despite the fact that we have only about 200 and change companies declaring earnings this week, as we're on the lighter side of the earnings cycle. So, just a big week with some economic numbers coming out. Today we had durable goods orders, and tomorrow we have consumer confidence. Thursday we have GDP, and then Friday we have core PCE. So these all could be market movers along with the earnings events. All right. So now we put out a trade every week, and we did so last week. This trade happened to be on Palo Alto Networks. All right. The stock is traditionally a pretty good mover. So we put a strangle on this particular trade. And I want you to notice on the right-hand side where the risk graph is, the right-hand side of this image, the black line and the flat part down there on the left side of that black line, that shows that our debit in this trade was pretty expensive. This trade was almost $3,000 for this particular strangle. And that is a little cost prohibitive for some traders. But for others, hey, they got the accounts and the size of accounts that can accommodate that. So I'll put these types of trades out there once in a while. So don't be surprised when you look at some of these and they have some big numbers. But I have a surprise for you in a minute. I have a trade for you that's coming up in just a minute that even the small trader can afford it. So stand by for that. But let's take a look at how Palo Alto did. We were in the trade for just a few days, 3 days, and we got that nice little pop there that generated, really, it climbed over that 374 level. Okay. And as it started to pull back, that's when we would have exited the trade, because we're looking for that follow through, that jump, that gap up, and then the follow through. And if it starts showing weakness and begins to pull back, we'll take that trade off. And we did so with a $556 profit in the trade, okay, which was almost a 20% return on investment. So, not exactly what we would have expected. We expect a bigger move from that and hence bigger profits. But 20% in 3 days, hey, we're going to take that every day of the week. Now, the thing about this style of trading and trading earnings is when you have good, consistent a plan, when you have a good, consistent plan, and you're very diligent about it, you'll once in a while hit a home run. Okay. And let me show you what that looks like. I'm going to take you inside our Delta Neutral breakout publication and show you a trade that I sent out last week for our subscribers. Okay. And this stock, which is PDD, had earnings this morning, and they just got decimated. In fact, I'm going to jump back over to the chart real quick, and I'm going to pull up PDD. Okay. And you can see here the stock is down almost 30% on trading right now. It was trading at 139 on Friday. Okay, closed at 139 and change. Well, you can see, pretty much 140. We'll round up to 140. And today is trading at $98. $98. Well, this morning I sent the alert out when we were trading right around $100, $101. Okay. So let me show you what that looks like. Okay. So here it is. We sent out this trade. The entry is down here in green. We sent out the trade alert. This is trade ID 1241. This is for our publication called Delta Neutral Breakout. And I send out the commentary on the trade, talking about why we're entering, some things to look for. And then I send out this little risk graph image showing that, okay, the trade is roughly $1,000 for this strangle. This happened to be a strangle. Those went out to our subscribers. And then we just sat on the trade. And look at this just this morning. Okay, this morning, here we are, August 26th. The market opened up. I sent out the alert. Look at this. I was a little off. 103 is where we sent that alert out. We were trading at 103. And look at the profit here, 290%, 289.95. That's 290 in my book, 290%. That was over a $3,000 profit in just 5 days on this particular trade that came out this morning. So PDD, again, they're a retailer that controls Temu. Okay, they're an online retailer. Think Amazon, but a little different. And boy, they gave a poor outlook for going into the fall, which is their biggest time of year. This will be very interesting to watch this stock as we move through. That $100 level is a big level. I'll be interested to see if we hold that. But as you saw from the chart just a moment ago, we're trading down at $98. So for all of our subscribers that might just now be exiting the trade, guess what? They're getting out for a bigger profit because those puts exploded in value. And boom, we have our home run trade that we just took off today. So let's get back to our trade for the week here, because as I mentioned, I got something a little special for you. Okay, this will be a straddle. This week is on Sentinel One. Now, this happens to not be a retailer. This is a cybersecurity company. Okay, Sentinel One. The symbol is S. Okay, nice and simple, one letter symbol. And I'm putting on a straddle. Okay, and that's buying a call, buying a put, same strike, same expiration. And we're looking for the stock to move, hey, similar to what PDD did today, or maybe similar to Palo Alto Networks. Okay, we just wanted a nice little pop in the stock when we put on this type of strategy. Now, if you look at the point in the risk graph, which again is on the right-hand side of this page, and you look at that black line, okay, where that point is, and then go all the way down, you can see that this particular trade is only about $385, okay? Only about $385. So even a smaller account, let's say $10,000, that would be a 3.85% risk on portfolio. Very achievable, very doable, no matter what your risk profile is. All right. So this is a little less expensive type of trade, but we want those same results. We're looking for that pop. So that is it for today. We're focused on the retailers. Next week, we'll see not only how some of those retailers did and the overall status of the market, but we'll also talk about this trade today on Sentinel One, give you all the updates. So everyone have a great trading week, and I will talk to you again next week. Take care.